Welcome, everyone. Welcome to Horasis India conference, and it's great to be part of this again. Today's topic is very interesting. It's about how Indian firms are, going global, the expansion of Indian companies abroad. We've seen in the last many years now, and more so in the last year or so, that outbound investments from India have really gone in under considerable change. And it's not just in terms of sort of the volume of the investment, but also in terms of the geographical spread. So today we're going to look into where and what sectors are these Indian investments focused. What are the big challenges that COVID has posed in front of Indian firms expanding abroad? We've recently just seen a massive IPO with Zomato. We are going to see a Paytm IPO, which is going to be as biggest tech IPO. There's lots of stuff to talk about, and we have a brilliant panel to discuss that with. So let me introduce our panelists. We have Tarun Gupta, who's the managing partner, TNA Consulting, joining us from India. We have Stephen Phillips, Director General, Invest Hong Kong, joining us from Hong Kong. We have Andrea Moni, co-founder and managing partner, Blue Spark Hub, joining us from Singapore. I'm Spriya Srivastav. I'm joining you all from London. I'm the executive editor for the business division of Insider, and I've been in London for over 13 years, a journalist. But originally from India, so you can imagine that this topic is very close to my heart. And today, I think this topic is also very interesting and relevant at the moment as we read more and more about the growth and scalability of Indian companies across the world. And I was also reading just the other day that it's also very interesting that Indian startups have raised more than $10 billion in funding, in a record in just the first half of this year. I know you'll say that there's a lot of easy money available out there because of the ultra loose monetary policy that the governments have. But it's still extremely interesting that there's just so much funding that's been provided to startups just at the start of this year. So I think we're going to focus a lot on, what sectors are very hot right now, and what are the ways that to tap into these opportunities. So we'll hear both from an Indian perspective and from an international perspective as what is it that's hot right now. And then we can't ignore the elephant in the room, COVID. That's brought about loads of challenges, right, in front of all of us. So it actually pushed us back to the drawing board. We all sort of started thinking about how best to evolve, how best to be innovative. And that was something that was seen across sectors. So this is another sector, and investments is definitely an area where investors started to get more and more, sort of started thinking a bit more innovatively. How do I get returns on my money? Traditional ways of investing isn't the most lucrative at this stage. So people started going into Bitcoin and cryptocurrencies, as we all know, which is again not the most regulated, but that's people want returns. And emerging markets have posed that sort of opportunity as well in front of investors. So we're going to sort of talk a lot about that. But before that, I want to bring in our brilliant panelists. Give you all 3 minutes to give your opening statements, and then from there we'll make it more interactive and go into question and answers. I see that we've got lots and lots of people active in the room as well now, our listeners. If you have questions, please feel free to put them in chat, and I'll put them, I'll pick them up for you. We'll also do a proper 15-minute Q&A at the end. So let's get started. Let's start with Tarun. Tarun, if you want to give us a little bit of a sort of update on what really the Indian landscape for investment is like right now, and then we'll take it from there.
Yeah, thanks, Priya. A very good morning from Gurgaon, a suburb of New Delhi. A warm morning. Thank you, Priya, for laying the foundation for this panel discussion. Before I share my views, just as a background, as a firm, we are focused on attracting Indian outbound investments on behalf of investment promotion agencies from across the globe, and especially with North America and Europe. And we have seen a fundamental shift in the nature, the value, and the geographical focus of Indian outbound investments. Go back historically, Indian outbound investments were by large companies who were looking at resource-rich geographies. The Tata groups of the world, the Aditya Birla groups of the world, the large public sector, oil assets, coal assets. Resource is still big. Then the second fundamental shift happened in the late 90s, where it was led by three sectors. One is Indian information technology, a large player, automotive, and life sciences. And the approach was follow the customer. So all the companies you have, one, the large ICT companies, today they have development centers in over 100 countries, you have over 1,000 development centers. That was the second wave of outbound investment. And we are right now in the third wave, which we will speak about later, is what Priya hinted at, are the young tech companies. Some of them not so young because they've been in operation for 10 years, but these are young tech companies who are going global and who are going global early at a stage. The traditional entry barrier of capital, availability of risk capital is not there. I will speak later on the numbers on that. Spree already mentioned $10 million. And what are the 2 or 3 or 4 key assets? Number one, aspects of outbound investments from India. Number one, M&A. You look at any year, M&A accounts for probably 80 to 85% of all outbound investments. And that M&A is either to fill a technology gap, acquire a customer, or expand the product or service offering. Number one is M&A. Number two is the deep tech ecosystem of India. We will talk about some numbers, how these deep tech companies are led by technocrats, and the solutions are not India-centric. They are global solutions. And most of them have global markets right from their inception. The third is in terms of geography. The elephant in the room is the United States. You pick any year over the last decade, United States would be amongst, and the reason is more capital available, but also the single largest market for Indian life sciences, Indian IT, Indian automotive. And fourth is the greenfield investments, the manufacturing, the logistics hub. This is where we see the risk diversification coming into play, especially after pandemic, where some of our Indian companies' clients are saying, we need you closer to us. Today, we have seen export bans for some countries, including India. So, and finally, one topic which how do we see this global minimum taxation? How does that impact the routing of these FDI flows, which have been through offshore centers? How do we see that impacting? I think with that, I'll take a pause and I look forward to participate in the panel discussion. Thank you.
Thanks, Tarun. Those are actually very, very interesting points. And thank you for laying a background for us in terms of how, the landscape has evolved. Because you're right. I mean, generally, we would always think about the big companies, the Tatas, but the landscape has completely shifted now. And whenever we talk about investments into India or what's really happening, it's always the big tech companies, the startups that we tend to talk about, which is very interesting. So I want to bring in Stephen here now. Stephen, you may have a very different perspective of this entire thing. So we would really like to hear from you now.
Well, Spriya, thank you, and great to be joining everybody today. I'll try and offer that perspective from Hong Kong in terms of what we see in terms of Indian-bound investment. Just so you know, my role is at Invest Hong Kong, which is the inward investment agency of the Hong Kong government. Clearly, there's been long-standing ties between India and Hong Kong, and we have a very significant Indian diaspora here in Hong Kong. So there's some very long-standing, maybe third, fourth generation investment in Hong Kong. But we're seeing a lot of new investments and a lot of new interests. I guess just some general observations on what I'm seeing in terms of FDI interest in this part of the world. And then maybe go on to what I'm seeing a little bit more specifically in terms of India. And I would mention that India is very important to us in Hong Kong, and we've got a dedicated team in Mumbai to support Indian companies. Clearly, the economic fallout of COVID means that companies around the world are looking for growth opportunities. And that naturally leads a lot of companies to look at East Asia, with China as probably the leading part of that engine of the economic growth. And certainly what we're seeing is very robust interest from all around the world. It literally is at every continent where we're seeing that interest. The biggest challenge in the context of Hong Kong is that we have had very strict COVID regulations, so the ability to travel here at the moment is the biggest single impediment to actually closing investments. In terms of what we see from India, I think probably Hong Kong is around the 15th or 16th largest destination for Indian FDI in the last couple of years. China, interestingly, despite being the second largest economy in the world, is only around the 25th largest, which perhaps is something where there's a significant opportunity. In terms of sector investment from India, it's pretty broad. Financial services, food and drink, logistics, obviously IT. Very special to India is jewelry and diamonds, something that is very specific. Probably India is the only place in the world actually that has such a big representation here in Hong Kong. But then probably the hottest areas that I'm seeing are really in tech, and that's both big tech and small tech. We're seeing a lot of engagement between the startup communities, in fintech in particular, a little bit in biotech. And we're also seeing quite a lot of interest in Hong Kong as a destination for family offices. I think one of the other interesting things, perhaps, for Indian companies is that some 600 or so international companies that are in Hong Kong actually manage their Indian operations out of Hong Kong, which again adds something in terms of partnership opportunities. Lastly, maybe just what I see as the big opportunities. Hong Kong itself, a mature economy, similar perhaps to the UK, which might be a little bit more familiar to many Indian companies. What we have in southern China is a region called the Greater Bay Area. That's Hong Kong, Macau, and 9 cities in Guangdong. It's the 10th largest economy in the world already. Possibly by 2030 will be the 5th or 6th largest economy in the world. The most affluent consumers in China and some of the most innovative companies in China. So it's an area where we see lots of opportunities, particularly I think for Indian tech companies, but also picking up the trade and investment flows. China itself, of course, offers opportunities still, and East Asia more generally. And then probably the final thing that I would say is the overlay of RCEP. We think is going to see much higher growth in this part of the world. And what that also is indicating is that the trade and investment flows, they're changing a little bit from east-west, more to north-south. So particularly for service sectors, picking up where these new trade and investment flows are really developing is an opportunity, I would say, for Indian companies.
Great. Thank you very much, Stephen. That's very, very helpful. And we'll go to Andrea now, but I've just seen that Aarti has joined us as well. So Aarti, thank you for joining us. Just to introduce Aarti Jhunjhunwala is the Executive Director at Finotex Chemical India, and she's joining us from India today. Aarti, just to get you up to speed, we are just getting opening statements from all our panelists on what their views on the way sort of the landscape for outbound investments have changed for Indian companies. So let's go, Andrea. Andrea, you were just telling me that you're based in Singapore, and you've been there for a while now, and you've been sort of dealing with a lot of companies, Chinese companies, but not as much Indian companies as of yet. But when you look at the landscape and when you look at Indian companies, what is your point of view? Where do you see investments very hot at the moment? Andrea, I think you're on mute.
Okay, sorry. Yeah, okay, thanks. And thanks to Stephen and Tarun for laying down the work for me. I would say that in Singapore, there is quite a bit of investment. I guess the landscape is similar to Hong Kong. But what happened in Singapore is, I would call it a mostly sort of a reverse FDI, because it's a lot of Indian companies, Indian families, they set up maybe vehicles or holdings in Singapore for then reinvest in India. So that's a sort of a I would say a bit of a drugged up investments. But if we look more at a global level and the Indian companies expanding abroad, I think Tarun got it right when he was talking about the different phases of overseas investment of Indian companies. That in the beginning we were looking at either investments in the the ICT sector, where companies were basically following the clients, so going where the clients were to offer a better service, and also we're looking at maybe I would say infrastructure, all the heavy industries like ArcelorMittal did in Europe, that basically took over the whole steel industry of Europe, including Italy. And so right now I think we're gonna look at the fourth phase. Is probably not there yet, because the startup scene in India is not as mature as is in China. I mean, India does not still an Indian Alibaba or an Indian Tencent, which is probably a factor of the Indian consumer market that is still very fragmented, and is a victim of the logistics and the jurisdiction. But it's definitely changing, and then in that respect, COVID is helping for as much as COVID can help, because it's accelerating definitely a trend towards e-commerce, digitalization, and I believe that in the next 2-3 years we will see the Indian some big Indian players getting into the global scene, and then another thing to consider, that Indian companies that tend to be also very strong in the B2B sector. So probably something we don't see much, like companies working in the deep data or deep science. So companies that are most likely are investing in the US, but we don't see them because they work together with the Amazons, the Facebook, providing the infrastructure.
Great. Thank you, Andre. That's very, very helpful. Aarti, over to you.
Hello, everybody. Yes. Am I audible? I think I am. Yes. Yes, so I would like to introduce myself. I missed a little bit of the talk amongst our panel this morning because I was on another talk somewhere else, and I apologize for missing that. So I'm in the promoter family of Finotex Chemical Limited. It's an Indian company. We have factories in India, and also we have acquired a stake in a Malaysian company, which is a European managed company, Biotex Malaysia. And coming to our topic, which is Indian firms' global expansion, even during this pandemic, we are looking at some organic and inorganic growth overseas. We are looking at having a stake in an Australian company and also in a European company, which is during the pandemic that we see the scope because of China plus one strategy that is going on. Most of the imports and exports and trade from China has been quite slow, or I would say quite challenging for them. So the world is depending on India per se for a lot of their trade. And we are a public listed company. We are on the stock market of the country, of National Stock Exchange and Bombay Stock Exchange. And we see a lot of scope when it comes to Indian companies growing abroad in overseas market. And the way I would say we have our labor or we have our cost, a lot of international fund houses, a lot of banks, a lot of investors or high net worth individuals are looking at Indian companies for investing over here. So yes, this is something that I had to say.
That's great. Thank you, Aarti. Thank you all for your comments. We've got 25 minutes left, and I also want to spend some time in the end for question and answers for the audiences. I can see some questions coming through. But two very interesting themes have emerged. One, I think Andrea made a really, really interesting point that, yes, Indian companies are going global. Yes, we are seeing expansion, but India still doesn't have an Alibaba or a Tencent. It's a mature market. It's been there for so long, but so my first question is, what is stopping Indian companies from being listed on the New York Stock Exchange, for instance? When do we see a Zomato being listed on the New York Stock Exchange or a Paytm? First question. Second question I have is about tech companies. I know we're talking a lot about tech companies and startups and how that's a really big area. But there's also this entire debate that goes between. Can you guys hear me? Because I'm getting a message that my internet is a bit off. Okay. So the second point that's emerging here is a little bit about how this sort of debate between growth and scalability, that, startups are growing very quickly. They're growing very quickly. Like Uber, for instance, if you take Uber's example in the US, they raised funding and they went straight into IPO, head sort of down into IPO, and it wasn't the best. It wasn't the best IPO. It wasn't the most successful IPO. So in India as well, we see loads of startups that are raising a lot of funding. And if you see a SoftBank report, it really talks about this cliff after the seed funding round before the Series A, that loads of these startups really fall into that cliff, the cliff of death, as they call it. So, so two questions. So first question, let's look at what is stopping Indian companies from going absolutely global and getting listed on the New York Stock Exchange, or the sort of global stock exchange. And second, the tech startup industry in India, is that getting saturated? Are we really seeing saturation of tech startups in India? Because there's so much funding, but we don't really see them go beyond a certain level. So I'm going to keep it open now. Whoever wants to jump in first, please go ahead and we'll take it from there. Tarun, I see you've unmuted, so go for it.
Sure. I'll just take very quickly both the questions, because we worked with an overseas stock exchange for a couple of years. Number one reason for that, Priya, are the regulations, of which, although the regulations have been relaxed, where Indian companies from 2018, unlisted entities were allowed to list overseas, but unfortunately, we are still awaiting the modalities of the tax, which is implications for existing investors. So that's the number one question there is the tax clarity, as a result of which you've not seen, despite the Sahu Committee report. I won't go into the details. And the second part you mentioned on an Indian equivalent of a Tencent, Indian equivalent of an Ant Group, whatever we call it. You see, now we are at an early stage of a flywheel effect. Okay, we've had very successful exits from the likes of Flipkart earlier, right, wherein Walmart, and now we are seeing investors actually getting returns. Otherwise, India was very infamous that you put in your money, everything is long term. Long term, we are all dead. But the last few years, we've seen reasonable level of exits. As a result, Indian family offices are seeing investments in companies as an alternative asset. You are seeing large number of entrepreneurs who have made exits, who have made money, funding, creating new startups. We have very good example, for example, of Zoho, an Indian product like company who has in turn created a flywheel of startups. And now these are the deep tech startups or the SaaS-based startups which are venturing global. See, you have to segregate startups into three categories. One are the India consumption story, the edtechs of the world, the fintechs of the world. They are looking at more emerging markets, Southeast Asia. The deep tech, the AI, the blockchain, the robotics, these are all companies who are looking at developed markets. You get a better pricing. And third would be more are large companies who are now looking at startup nations like Israel, geographies like Switzerland, where they can get talent for computer vision, for e-mobility. So that's how, and I would stick my neck out and say, we may not have the equivalent of Tencent or Ant, but we will have fairly large number of companies who have this technology and who would have a cluster approach for new geographies.
Great. Thank you, Tarun. Who wants to go next? Stephen.
Yeah. Maybe I could just make some observations. I think on the listing side, that's very true in terms of regulation. I think the other issue is around valuation in the longer term. Even when regulations ease, obviously having deep investor pools that understand India well enough may be an impediment. Look, on the tech startup side, looking at India from Hong Kong, I don't see what's happening in India as that different to anywhere else. I don't see a particular problem that Indian startups aren't flourishing in similar rates to what I see elsewhere. So I would say it's a pretty familiar pattern. In terms of the startups that we're seeing out of India, looking at this part of the world, they really are world class. Some great technology, whether it's in terms of AI, absolutely categorically easily adaptable to global applications. That they definitely are not sort of parochial, only looking to solve problems within India. Now, it's a relatively small number volume-wise, but I tell you that they are up there amongst the best in the world, I would say. Also, the bit that Tarun mentioned about family offices looking at investing in startups, that's something that we're also seeing, and that includes family offices here who are looking at opportunities in India. Obviously, the sort of desire is that there's high growth potential, significant markets. But again, I think it just goes to this point that at least some of the startups in India are really seen as world-class from investors outside.
Great, thank you. So what's really stopping these startups from going global then? Or are they just taking the time to really understand the Indian market a bit more before they take steps outside? Why don't we see a lot of Indian startups going global?
I guess from my point of view, it tends to be, obviously, you've got a very large domestic market. So the imperative to internationalize is somewhat lower than if you've got a small domestic market. And we see similar things in the work that we do in China. That would be my guess.
Sorry,
yes.
Go
ahead.
Go, Andrea, and then Arti.
No, I think it's that, Tarun, correct me if I'm wrong. Most likely, a lot of these, I would call it, I don't know if you want to call them B2B startups or infrastructure startups. They are already international. We just know it because it's because, for instance, recently I discovered there's an Indian company that is providing all the compression and delivery algorithms and infrastructure for Netflix all over the world. I had no idea this kind of thing existed, but it does exist. It just we don't know it. I think it is a factor of the different structure of India as a country compared to China or compared to the US, compared to Europe. In China, US, Europe are very much consumer driven economies. So what we see Amazon, we see Uber. Why? Because they're companies we deal with every day. We don't see the companies behind the scenes that support those companies like Zoho. Zoho, how many people know Zoho? Not many, but most likely your provider for many of your suppliers are using Zoho as a CRM because it's a pretty good CRM and is I would say 10 times cheaper than Salesforce. So it's
yeah, no, that's a really good point. And I think, funnily, I live in London, and sitting here in Europe, when we are sometimes covering big stories about tech as well, we realize that actually Europe has no tech company of its own. We constantly keep writing about Google and Facebook and Netflix and Amazon, but the only biggest IPO that UK had recently was Deliveroo, and it fell flat. Absolutely bombed at the exchange. So I think it's a very similar situation. I think it's sort of not known. These companies are not as much known, so you automatically sort of turn a blind eye to it. Arti, I know you wanted to say something, so let me bring you in.
Yes. So belonging to the textile chemical industry, to the chemical industry of India, I can say that, these chemicals are mainly produced in the Asian side of the world. Like I would say China, India, a few of them are produced in Taiwan or countries like that. But seeing like you said, the tech part, the technology companies are all made in India. If you see, they are Bangalore-based, South India-based companies, and most of the startups are from there. So if I have to talk about our growth story, being an Indian specialty company, chemical company, I would say that, so if the company was founded in 40 years ago, and we got listed about 20 years ago. So we took our time in getting listed, and it was a phase-wise listing. We got listed on the Bombay Stock Exchange first, and then on the National Stock Exchange of the country. Then we acquired a majority stake we are still in a phase of acquisition of stakes in, strategically positioned companies who complement our businesses. So there is a good scope of Indian companies expanding abroad. But coming back to your question, it would always be like a plan and strategic growth, phase-wise growth. So we we started with acquiring a European managed and founded company in Malaysia, and we bought the stake because of the strategic location. Now today we are considering buying a majority stake in a company in Belgium. We are buying that because of their branding and because of the reach they have from Europe to the various parts of the world. So having said that, I would like to say that we are also expanding, like belonging to an Indian company and belonging to a listed company, growing in the global scenario of today. And also we have I would say diversified into various chemicals today. We are also into home and hygiene, our sanitizers and our cleaning detergents, which other companies like Diversay or Ecolab or these big brands are. So we're looking at JV with them. And if I have to answer your question, I would say that Indian companies do look at these opportunities. Of course, we have our eyes on them, but we wait for the time when we can actually go out and start talking about it and close the deals. So this is for your answer.
Yeah, no, absolutely. That's a very interesting point. So two things. So proper due diligence is absolutely needed.
Yes,
So, you're able to jump at the right time. And you need to just make sure that it suits your requirement as well.
Yes.
So,
Yes.
acquisitions.
Yes, and like you said, the due diligence, and it should add the value to the customers or the B2B businesses that we are already into. It has to blend over there.
Perfect. Okay, so final question before we open it for question and answers from the audiences. And if you have questions, please go ahead and write it in comments. We can't ignore COVID. It's around us. It started about a year and a half ago, and we are in this for a very long time. How do you think that has changed the thinking or the landscape around Indian companies? How has COVID come into play? For a lot of industries, we saw that they went back to the drawing board. They really had to think about how do we go back to innovating ourselves, changing ourselves. In this current context, in the context of this topic, how has COVID really posed both sort of challenges as well as maybe a blessing in disguise in some way? So, Tarun, can we start with you?
Thanks. Just the background, and I'll keep it focused on the outbound investments because that's the topic. See, India does not have very large firms, unlike China. There was a McKinsey study, we have about 600 odd big firms, which account for 40% of our turnover, and about 5,000 odd firms from 40 million to $500 million turnover. Okay. Now, going back to what Aarti's comment, for outbound investments due to COVID, we've seen large number of Indian companies in chemical space, in manufacturing space, who are looking at setting up a smaller production unit, assembly unit close to their large markets, be it Southeast Asia, be it US. That's number one clear change. At the moment, we are talking to several Indian companies who are looking at a setup, mainly in the US or other geographies. And the second aspect is startups are important, technology is important, but we also have to understand there's a large pool of our traditional Indian companies who are large investors. Motherson Sumi has plants in 85 plants, in God knows how many countries. Okay, so let's not ignore they are large investors themselves. Okay, second is in terms of the technology companies, they are earlier. It was all about following the customer, but they are now looking at talent. Despite all the positive news about Indian talent, there are certain segments, whether it's data scientists, whether it's cybersecurity, whether it's computer vision, AI, where Indian companies are analytics, they're chasing talent. They are working with colleges, with the universities to make sure that the curriculum is relevant. They are asking questions, what are the number of graduates coming? Because they need that kind of talent in those geographies as well. So these are the two changes we have noticed over the last 18 months.
Right. That's great. Let's go over to Stephen before I ask any more questions, because I would love to hear from all of you on this topic.
Yeah, I guess I don't have the deep insights that Tarun and Aarti would have in terms of what Indian companies are thinking. The sort of more generic issue that I'm seeing really is that companies, picking up on Taryn's point really about manufacturing, are looking at diversifying supply chains in essence. And secondly, I think a lot of the companies that we're working with really are looking at diversifying their global portfolio, because those companies that have found that they're very, very focused on just one particular market have realized that may not be the best type of approach when the world is in a very, very large state of flux. But they're generic comments.
Perfect. Let's go to Aarti and then Anand.
Again, talking from my perspective, from my point of view, I would say that with COVID, the big elephant coming in the room, a lot of Indian companies have taken it like an opportunity rather than a challenge. When it comes to us, we cater to majority textile companies and textile mills around the world. As soon as the COVID lockdown was announced in the country, we saw that when we export to about 69 countries around the world. So a lot of them started telling me that, hey, RT, we are not buying textile chemicals anymore. We are buying only, disinfectants. We are buying only hand rubs, and we are buying only alcohol-based cleansers. So do you make that? And with that, we started a new range to our company. We started producing. We have our own hygiene division today with about 47 products which we manufacture and even supply globally. We started a new avenue, and also we could foresee that once this pandemic comes to an end, after the vaccinations are done, we foresee that the quantities would jump, the demand would jump in every sector, because it would be the new way of life. Cleaning, hygiene, and these products will be the new way of life. So coming back to it, we even diversified. We invested in plants. We invested in factories, machinery to take the future in mind. We made these changes. So COVID was challenging, but for us, we took a lot of measures to make sure we continue what we are doing. At the same time, it was a good chance to diversify, and at the same time, it was a time to grow. So back end, we were growing, and going forward, we diversified our portfolio.
That's such a good point, and that's what a lot of companies who've managed to stay afloat did, right? I mean, when COVID, the pandemic hit, and people started running out of things like sanitizers, we saw loads and loads of companies really jump in to make these things and create these things. Another innovation we saw was all of these ghost kitchens or dark kitchens sort of cropping up here and there across. And I think India is a big market. I was just reading about the amount of ghost kitchens that have actually emerged in India now. And those are the things that has taken Zomato into IPO, right? Because people have been home, people have been ordering, and the companies have stayed afloat. So yes, I mean, there are definitely opportunities that a lot of industries have really jumped into. Andrea, I know you wanted to say something as well, so over to you now.
No, I just wanted to follow up on the COVID, on the question about COVID. As in COVID, I mean, I think all over the world, COVID got a strong push toward modernization of companies, meaning that it's most companies have to deal with hybrid work solutions, digitalization. So this for sure has forced a lot of companies which were inefficient to become more efficient. So this definitely has helped, and also maybe in countries like India or Italy, where the work culture was more traditional than in the US. So that's definitely COVID has been a blessing in disguise for this. And then if you look at more traditional industries like the chemical industries, for sure right now there are a lot of opportunities in the industrialized world where it's because of regulations, because of cost, a lot of traditional investors are leaving that sector. So it's a big opportunity for companies coming from emerging markets to make acquisitions and get market share.
Great. Okay, so we've got 5 minutes now. So we've got 2 questions from audiences. And Sushil Premchand asks the first question, says, could the panelists please comment on the relative ability of Indian entrepreneurs to understand the cultural attitudes in Europe, letting competent managers get on with their business? Who would like to answer that? Tarun,
I'll take it up.
I see you raised your
I'll
hand.
take it up. Hi, good morning, Sushil. Sushil is a good friend, known him for a while. Sushil, you hit upon a very, very good topic, and I'm glad you brought it up because we all talk about capital, growth opportunities, and we forget the cultural nuances. I would still say that the cultural adaptability of the new age entrepreneur is higher than maybe we have seen a decade ago with some of the other industries. Most of them have early exposure, even education, to a different environment, and they are relatively more open for a team of competent managers in that jurisdiction. It's not easy for them to loosen the hold, but it is definitely better than what we have seen a decade ago with some of the traditional industries. But it's still a learning curve. And before I sign off, Priya, just on your cloud kitchen, my good friend Rebel Foods do that kitchen in London through Holy Cow. He's a batchmate, so please try those cloud kitchen.
Sure. Yeah. No, I've heard of Rebel Kitchen. Yeah, and we've survived the pandemic because of Dark Kitchen. So that's absolutely true. Okay. The next question is from RR Shibu. With the ongoing India-China issues, are the Chinese investments on a permanent nosedive? I feel like Stephen and possibly Andrea could be able to shed more light on that. So, Stephen, if you would like to take that question first.
Yeah, perhaps I can answer it by making an observation on another strained geopolitical relationship, US-China, where I see almost a parallel universe between the political rhetoric on Capitol Hill and what US companies and Chinese companies are doing on trade and investment front. So if I look at US investment going into China, that has continued to increase throughout the last few years that have been very turbulent on the geopolitical front. And certainly when I look at it in the context of Hong Kong, again, we see very strong interest. So just by answering it that way, maybe that becomes a decision for companies to decide what's in their best interest versus following a geopolitical lead.
Yeah. Andrea, would you like to comment on that?
Sure. I think it is it's a factor of the different relationship there is between China and India at the moment. That it's I would say that right now there's a big between the US and China there's a big battle at the geopolitical level to control the world. Let's say it's so obviously that's there are a lot of issues between foreign investment between US and China, and there have been restrictions between each country. So that's there's a big reason. While with the US and India there is a more friendly relationship, at least at this stage. Then we don't know whether it will continue, but that's how it is at the moment.
Yeah. And I've literally just seen, thanks to RR Shibu, that Aarti, your company, the shares have gained over 300% in the last year. Tell us, is that sort of really going back to the drawing board and coming up with new ideas? How did you guys manage to do that?
Yes, thanks to the good, kind comments from RR Shibu, and thank you, Spira. So, like I was, explaining myself earlier, and I have been sharing that in this pandemic, we changed a lot of strategies. We tried to look at a lot of opportunities which could grow the company in a permanent way and not like a, temporary due to the pandemic change. So we have recently had a joint venture with an Australian company called HealthGuard. They are primarily into anti-mosquito, antiviral, anti-mite, and all these kind of finishes for the textiles. So for your beddings, for your clothing, for your homeware, for the stuff that we wear. So these are like antivirals and antibacterial and antimicrobial finishes. So we have invested and joined hands with HealthGuard Australia in the last 1 month. We have expanded our production capacity in the last 1 year. We have diversified our portfolio and started a completely new range in the last 1 year, and we are looking at 2 more growth opportunities, one in the Europe and one in India itself, which would complement our portfolio. So because of all this, and also China Plus One is helping a lot. I see somebody's comment over there also on China Plus One. So the freight from India and like we export to 69 countries around the world, the freight to all these countries were earlier $1,200 or $1,500 versus for like $10,000 a container today. And what we see is that everybody is ready to pay for that high charge, which is into crazy amount of times that it used to be. And the customers are absorbing that charge today, and they prefer to work with a good, reputed, branded Indian company versus a Chinese company, due to freight or due to less of reliability over there. So because of all these changes that have happened and things that we've incorporated in the last 1.5 to 2 years, we see the growth, which is well noticed and commented by Mr. R.R. Shibu and also by R.I. Narayan here, which I can see.
Perfect. Thank you very much. Well, we've run out of time, but I'm going to give you all 15 seconds each to give me closing statement, one line, really, a tweet length line on what is the future for Indian companies. 15 seconds each. I'm going to start with Tarun.
Okay, I go 4 segments from outbound investments from India: SaaS, deep tech, precision medicine, and robotics, advanced manufacturing. That's for the next wave. Thanks.
Perfect. Stephen, over to you.
Yeah, great opportunities for Indian companies in East Asia through Hong Kong. Give me a shout if I can help.
That's awesome. Andrea.
Sure, I think there's a bright future, especially in the, as Arun said, in the deep tech sector, where the competences of Indian companies are excellent.
Aarti.
I would say the scope from India would be, of course, technology, would be pharmaceutical and textile and chemical sector, which I belong to. So these 3 industries, I see a good scope.
Thank you. Well, thank you so much for your time, all of you. It's been such a pleasure moderating this panel. Even though I had to wake up at 5:30 a.m. on a Saturday morning in London, I really enjoyed every bit of this panel. So thank you for your time. Sorry?
I hope we can connect with everybody on LinkedIn. And,
yes, please, let's connect, everyone. Let's stay in touch. But thank you again for all of you, for your time, for the comments, the audience. Thank you for your questions as well. It's been a pleasure hosting this. And I wish you all a happy weekend and speak to you all soon.
Thank you.
Thanks a lot, everybody.
Bye-bye.
Thank you.
Bye-bye.
Bye-bye.